All right, well, I'll go ahead and kick it off. So thank you all for attending. This is our most treacherous virtual meetup to date, I'd say, right? So, obviously this is the Texas multifamily meetup. And of course, most of our audience is from Texas. So glad to see 50 people are on, right? And statistically here in Houston, I know like 45% of people don't have power yet. Luckily, Ben put himself in a place that has it, and my house's power turned on about a couple of hours ago. So we are part of that fortunate 65%. And I'm guessing most of you are as well. So appreciate anyone that's kind of put in the effort to really get out to the event. I know we have an awesome speaker today. But before we kind of kick it off, right? As mentioned, we're part of Multifamily Masters. It's a group that we help kind of run. And really, Ben and I represent the Houston chapter. We have our partners that represent the Dallas chapter. And Multifamily Masters is really about building a national meetup brand, right? There's hundreds of meetups across the country. And rather than everybody doing their own thing, how do you combine forces and really help streamline the meetup part? I like to joke whenever I first met Ben, and he was running the meetup first, and he would just kind of hold his finger to the air and decide to have a meetup that next week, right? There was no consistency to it. There's a lot that goes into running an effective meetup, right? Process, systems, as well as topics. And so Multifamily Masters is really about helping put everyone under the same brand and kind of help streamline that process. And as once COVID hit, right, we decided to meet with the other Dallas chapter, and rather than doing the million virtual events that are out there and we do our own and they do their own, we figured, hey, let's combine and let's do a Texas one. So that's the one that you are all on today, and excited to kind of kick it off. And maybe I'll give a quick background on myself. I'm Ferris. One of the partners at Disrupt Equity. We have properties throughout Texas and Georgia, and we're also vertically integrated, so continuing to kind of buy in those markets, continue to operate in those markets. And so I'll keep that brief. Ben, you want to go ahead and introduce yourself?
Yeah, you did such a great job. What am I supposed to say here? Yeah, no.
Usually how it works.
I know, right? So I won't reintroduce Disrupt Equity, right? Other than to say vertically integrated. What does that mean? That means we have the property management and a couple other integrated businesses that make things a little bit more efficient when we're going to buy business or buy properties. And we're going to continue to try to scale that out in Texas and in Georgia. So came from IT, sales and business development. Putting on events, going to events, passing out business cards, putting on presentations. That was just kind of my shtick. So got into real estate in 2013, got into multifamily in 2015, and been buying up properties ever since. Partnered with Ferris in 2017, and we've been buying up properties under Disrupt Equity. So I'm just excited to kind of keep going down my path and my journey. So I'll go ahead and I'm just going to throw a dart here. I know Neil. You had to run
about half of our Dallas partners on, so kind of
so we'll start with Neil, and I see Ronnie on as well,
and Anton.
Yeah, and Anton's here.
All right.
Hello, everyone. For those who don't know me, I'm Neil Bertrand. I've been in multifamily for about 22, 23 years now. Roughly 16 years at the executive level. Currently Vice President of Acquisitions and Asset Management with REIT Group, which is based in Austin. We're also vertically integrated. We have, the investment division, property management, construction, all in-house. And as Ben mentioned earlier, kind of makes it easier to get deals done and work with private equity firms. Ronnie?
I like it. Mr. Ronnie, you got the hat on today, man? Look at you. I bet you that beard kept you warm, man.
Trying to stay warm.
I like it, man. I like it. Even though it's Mavericks, but whatever. I'll go with it.
So thanks everyone for being on. My name is Ronnie Phillip. I'm with the Kingley Group. We're a real estate private equity firm based in Dallas, Texas. We focus on large A and B multifamily across the Sun Belt region. Currently at 572 units and looking to continue to grow. And happy to be here.
All right. And last but not least, Anton.
Hi, everyone. Can you hear me?
We can hear you.
Yeah, all right. So I can't be on video. I had probably around an hour and a half of power spread over the last 24 hours. So right now I'm off. So I'm on self-service, self-service. So hopefully at least the audio comes through. So my name is Anton Madley, co-founder and CEO of Peak Financing. We arrange financing for commercial real estate across the country with a strong focus on multifamily properties. Me personally have been involved in commercial real estate now almost 30 years. in all asset classes. Also personally invested in a number of them, but certainly multifamily has been the most consistent of them all. And so that's also on the financing side. When we look over the last year, that's where it was easy to get financing outside of maybe logistics and self-storage. Obviously, mobile home parks are part of that too. So that's me, and put my contact details in the chat, and I may or may not be able to be connected on this call. But anyhow, Brian, thanks for joining us.
All right, thank you, Anton.
And let's
So with that-
let's do a quick shout out to John Montero.
Yeah.
And actually, I wanted to thank Ronnie, Neil, Anton. I know you guys are getting the brunt of it up there. I mean, we're kind of complaining a little bit down here. It's not great down here either, but I know it's a lot colder up there. So thank you, gentlemen. John Montero has not been able to get on. He's our other partner out of DFW. And he does a lot of different things, from development to, obviously straight up acquisitions in the apartment space to land flipping. A lot of people probably are familiar with his name or follow him on Facebook, but he's a good guy as well. So he's our other partner in DFW.
Not bad, not bad. He should hire you to kind of deliver that for him.
Oh, man. That's totally on the fly too.
With that said, so enough about us, right? So kind of we're the leadership to help run the chapters. If anyone has any questions, feel free to reach out to us, right? But you guys are not all here for us as much as we might want to hope you are, right? I know we're all here for our guest. For those of you that are attending for the first time, right? The way we kind of typically structure this is we'll do about 30, 45 minutes with the guest speaker, right? If you have questions, comments, definitely go ahead and put them into the comments as we kind of progress, and we'll help moderate them. And then we'll leave the last little bit to basically do what we call breakout rooms, right? Networking is all about the people you know. This multifamily is all about the people you know, and networking is such a critical part of that, right? And really, that's probably a good segue to our speaker today. So Brian is our speaker today. He's a friend of mine that, I actually met at a mastermind, and initially he was really quiet. And then I was fortunate enough to basically get to sit next to him on a bus ride over to a restaurant, and kind of got to really know him, and like, hey, we click, right? And so Brian is, he's got an awesome story. I'm gonna let him introduce himself. I think Brian, for me, at least your progression from kind of, what you did in the Northeast, right? And the kind of the types of properties you're doing into mobile home parks is really interesting, right? But Brian has brought mobile home parks throughout the country, and he's kind of happy to give you guys a little bit of an inside scoop on what that looks like, what that process looks like. And any questions, comments, let us know, and we'll moderate them. So Brian, you want to go ahead and introduce yourself?
Yeah, sure. Hi, everybody, and thanks for working through all this storm to get on this webinar today. So really appreciate that. I actually started in real estate back in 2007. I started a company called Washington Street Properties. Started off as kind of like a side thing to help. My thought was, hey, I want to grow my income, and I ended up just expanding. And I started with an office building, moved to retail, and after a few years, I jumped into multifamily. I financed everything through, I didn't have a whole lot when I got started. I assumed a mortgage on my first property. I got owner financing on my second property. I couldn't get a bank to lend to me for 3 years. But then I started to do cash out refis and accelerated my buying. And after about a decade, I built a portfolio of about around 60 million. And I did that without raising any capital. So I made the shift into apartments and multifamily. And then at that point, I started to get involved in syndications and raising capital. And so over the last few years, I've grown my portfolio dramatically, because that limitation on growth, which was capital, has kind of gone away to some extent. And it was coming up on 2 years ago that I made a huge jump into mobile home parks. And I know that's probably what most of you guys want to hear about today. So, I'm going to share kind of that journey. It's been a crazy whirlwind of 2 years that something I didn't see coming, but I've learned a lot, and I'm looking forward to sharing that with you guys tonight. let's see. So it started with
Before
another
you make that hop really quick, Brian,
Yeah.
you also wrote a book. You want to share the book? Because I'm willing to bet a lot of people on this call have read that book.
Yeah, so about 4 years ago, I wrote a book called Crushing It in Apartments and Commercial Real Estate. And just at that point in time was really motivated. I won some national awards and started to get a lot of recognition. And I had a lot of people reaching out, asking for help and mentorship and guidance. And so I really didn't have enough time to mentor as many people as I wanted. So I wrote a book, kind of put everything I learned, the things that worked, the mistakes I made, and wrapped it all up into Crushing It and put that out there into the world. And it's done really well. And it's been really rewarding to get a lot of positive feedback from people that it's helped. So yeah, that was pretty great. And I'm pretty excited. I'm co-authoring with Brandon Turner from Bigger Pockets, 2 volumes of a book called The Multifamily Millionaire that's going to come out later this year. So got 2 more books coming out by the end of the year. So pretty excited about that too.
Awesome.
So yeah, so mobile home parks, I had one mobile home park that I've had for a really long time, but most of my portfolio a couple of years ago was probably about 2/3 apartments and the rest is commercial, retail and office. And I've had self-storage investments, billboards. I've had a lot of like dabbled in a lot of different things, but most of my portfolio was in apartments at that point in time. And I attended a mastermind. It was called the Maui Mastermind that Brandon Turner from Bigger Pockets organized. And I've known Brandon for about 6 years now. I was on the Bigger Pockets podcast a couple of times, and we had stayed in touch, and he invited me to this mastermind. And we got to talking, and at that point in time, I was getting ready to put together a team to do some large apartment syndications, and Brandon was looking to do the same thing with mobile home parks. And we got to talking about it, and he was asked me if that was something that maybe we should work on together instead of me going down one path, him going down another. We thought, hey, if we kind of combined and put our heads together on this, we could do something pretty special. And to be honest, initially I was pretty hesitant. I was really excited about apartments. I knew something about mobile home parks, and I had some experience with them. But the more I studied it and the more we talked, the more I realized that there was a great opportunity there, and we decided to jump into it. So a couple of the things that attracted me to mobile home parks right out of the gate, I would say probably limited supply was one. You know, there's not a lot of new mobile home parks going in out there. In fact, it's just the opposite. In major markets all across the country, people are scooping up mobile home parks, kicking all the residents out and repurposing the land. So you don't have a lot of you don't have to really worry about oversupply. The other thing is I'm very attracted, and I have been for a long time, to workforce housing. And that could be C-class, B-class apartments, but it could also be mobile home parks. And I feel like there's always a need for affordable, safe housing, and it's also an investment area that I feel is quite recession resistant. In fact, the pandemic, I think, has illustrated that, because this pandemic has disproportionately affected sort of the lower blue collar workforce in terms of all the hospitality workers, restaurant workers. Like it didn't touch the white collar workers as much as prior recessions. And yet our workforce housing across apartments and mobile home parks have held up very, very well. So I would say we've probably averaged across all of my workforce housing maybe about between a 3% and a 5% drop in collections, and I'm pretty happy with that. It hasn't posed any issues, hasn't slowed us down, and we've weathered that fine. And so I feel really confident going forward that if there's any more economic downturns, that the mobile home park world and C and B class housing, there's supply constraints on the apartment side as well. People aren't building new C class apartments. So and then the last thing that attracted me to it, there were others, but the other major factor was the amount of value add that I saw in mobile home parks. And things have evolved a lot over the last couple of years, but for the most part, particularly when we first started, not a lot of value is placed in empty mobile home park pads. And the reason for that is it's not viewed as very easy for people to move in mobile home parks. It's expensive, it's beyond the means of a lot of residents. And so it's challenging to fill vacant pads. Also, most mobile home park managers are operating on a shoestring, and they don't have the time or the resources that are necessary to effectively fill mobile home parks. So as a result, that's one of the biggest differences I saw between apartments and mobile home parks was you could go in and effectively really only pay for the pads that were occupied, and then have that value add opportunity to go in and fill vacant pads. And we hired a full-time person onto Open Door Capital, the partnership that I'm in with Brandon Turner. We hired a full-time person. All they do is track down homes and fill pads for us. You won't find that among most operators in the mobile home park space. And it's been a very effective strategy for us. So that opportunity coupled with just plain good management. When I partnered with Brandon, he and one of our other partners, Ryan Murdoch, had gone out and they had interviewed every large management company that they could find. And they really couldn't find good third-party management in the mobile home park space. So one of the things that I agreed to do is I had built a property management company of my own. And I agreed that we would take on management of these parks. And it wasn't something that we really wanted to do, honestly. It was just the only option because everyone we talked to who was using third-party management was dissatisfied. And I can tell you, after being neck deep in the mobile home park space for the past 2 years, that the level of management in a mobile home park space is atrocious. The standard is so much lower than the apartment space. And so as a result, when we go into a park, without even trying, just operating it the way it should be run, we've seen vast improvements at almost every park. So there's a lot of value add there. Some of it's obvious and some of it's not as obvious, but good management creates value, and that's really helped us. So those were some of the things. Like the more I studied it, the more we talked about it, the more excited I got. And so I jumped in with both feet, and it's been kind of a crazy ride. In terms of what our strategy has been at Open Door Capital, what we want to do, and I was definitely part of a significant shift when I came on board in terms of the mindset. And what we decided to focus on are assets that we feel could be institutional quality assets. They don't have to be institutional quality going in, but we want to see the capacity that they could be when we exit. So everything we do, when we're looking at parks and we're thinking about what do we want to buy, what do we not want to buy, we're constantly thinking of our exit and maximizing the value when that day comes. And in the mobile home park space, so many properties are so messy. I mean, they can come with anything from a liquor store to a laundromat to practically anything you can think of. It's all highly like there's mom and pop operations all over the place. You've got parks operating with fully park owned homes that they're basically doing, almost more of an apartment model with mobile homes. We want to stay away from stuff like that. Like we want to rent pads. We want to rent the land. Like we don't want anything to do with maintaining the mobile homes themselves. So what we're thinking about is, hey, we want the larger parks, and I'll go through what our actual investment criteria with you guys as we go through this. But the idea is do everything with the exit in mind. It's either institutional quality going in, or ideally, because if you get an institutional quality park, the cap rate's really low and there's a lot of competition for those parks. But if we can find a park that, say, ideally the occupancy is maybe 10 to 15% below where you could get agency financing, or where you're going to get the major players coming in and scooping that up, we could go in, get it at a discount, fill it up to a point that checks all the boxes, and all of a sudden the cap rate will compress just because we raised the quality of the park. So that's ideally what we want to do. Infill of vacant pads is probably one of our other kind of differentiators. We place a huge emphasis on that. We've invested in that significantly, and it's probably one of our biggest strategies that kind of sets us apart is that we have dedicated resources that do nothing but infill across the portfolio. The other thing is there are certainly advantages that come to partnering with Brandon, because for you guys that don't know who Brandon Turner is, he's the host of the Bigger Pockets podcast. He's also the best-selling real estate author in the world. So he has a really expansive reach and a following, and we've been able to leverage that to help us quite a bit. So that's helped us attract and retain some fantastic employees, some good partners as part of our partnership. But it's also helped us to find deals. We put up a website, it's called bringbrandоnadeal.com, pay people $100,000 referral fee for bringing us any off-market parks. So there's definitely, and capital raising, he's taken the lead on the capital side. So I'm the asset manager. That's my role at Open Door Capital. Although I get involved on the operations side in the acquisitions and pretty much have my fingers on most of what's going on a day-to-day basis. But we've got some great team members that are stepping up, and my focus is getting more and more just on the asset management. But Brandon's role is pretty much exclusively on raising capital. And we're about to close our third fund. First fund we raised $5 million. The second fund we raised 10, and the third fund we raised 15. And it's been great. The challenge we have is to deploy it all, but we do it in a blind fund, so people invest, and then we go out and we find the parks, and that's come with some significant advantages as well. I told you guys I would share our buying criteria. So let's see. The first thing is we're looking for large parks, so 100+ lots. We want municipal water and sewer, public utilities. So a lot of parks that are out there, they've got lagoons, wastewater treatment plants, wells, and there's nothing you can get those, and you can get probably a better return on parks if you're willing to deal with that stuff. But frankly, most of the institutional quality buyers, they don't want to deal with those because there's risk associated with that. You can get those at a higher cap rate, you can get a better return. Not necessarily a terrible route if you're just getting started, if you feel comfortable with that, but there's definitely a higher risk. If you have a problem with a well and that's your sole source of drinking water, then you could be in really big trouble. So there's environmental concerns and permitting issues with non-municipal wastewater treatment facilities and lagoons and things like that. So we don't own any parks that have anything other than public water, public sewer. We want to have less than 25% park-owned homes. And if we buy a park that has park-owned homes, one of our primary goals is to get rid of those as soon as possible. In fact, in some cases, we'll give them away. It can be more expensive and hurt you through the expense side to own the home and rent it out, particularly if it's an older home, than to just give it away and collect, at a much higher, lower that expense ratio. And we don't want to own homes. That said, almost all the time when someone's operating a mobile home park, you just end up owning homes one way or another. So it just happens. And if we buy parks that do have some, we want to get rid of those. We want to have no more than 25% RVs. So we're not in the RV space. We really don't want to operate RV parks. But again, a lot of mobile home parks have a small RV component. We're okay with that, particularly if they're long-term RV people. We want to have 55% occupancy or better. So infill is great and we're good at it, but we don't want to go overboard. If we have a park that is at, say, 20% occupancy, it's a lot of work to fill those pads, a lot of work. And so it would have to be an amazing opportunity to consider buying a park that's much lower than that. It's also going to be very capital intensive to fill a park that much, which is something that we have to take into consideration. We want to have 100,000 or greater population within 15 miles, 100,000 plus median home price, and we want a high purchase price. We don't generally look at anything that's lower than a $2 million park, but we strongly prefer something that's, $6, $8, $10, $12 million. It's pretty much almost the same amount of work to buy a $1 million park and operate it as to buy a $10 million park and operate it. So there's these huge economies of scale. So that's what we want to do with that. In terms of the acquisitions that we've done so far, I'll kind of walk you guys through real quick. We put the partnership together basically summer of 2019, and we closed on our first park in Fostoria, Ohio that fall. It was actually 2 parks, but they were contiguous, and we merged them into one park after we closed. They were under separate managers, and we combined them. It's been a hugely successful park for us. We've raised the occupancy about 15% since we bought it, probably close to double the valuation of that park. In 2020, we purchased a park in Minnesota, East Grand Forks, Minnesota. Fostoria, by the way, had 168 pads. The one in Minnesota had 177 pads. We purchased in Superior, Wisconsin, 147 pads. Panama City, Florida, 100 pads. Whitewater, Wisconsin, 230 pads. And Valdez, Alaska, 175 pads. Actually, we closed on Valdez in the first week of January of this year. And that was in Fund 2. And actually in Fund 3, we closed on in a park in Louisville, Kentucky, 199 pads. So that's about 1,200 pads that we closed in a little over a year, about a year and less than a year and a half. We've got another 500 pads under contract right now. Parks in Nebraska, one in Indianapolis, another one in Michigan, and one in Bloomington, Indiana. So that'll put us at about 1,700 pads. That's between what we've already closed on and what's under contract. Little over $50 million in parks. And I think we're going to probably double that or come close to it by the end of this year. So just to give you an idea, in 2020, we evaluated more than 800 mobile home parks. We put out 80 offers, and we purchased 5 parks in that calendar year. So we had the one at the end of 2019, and we had one in January of this year, but we had five parks that we closed on last year out of over 800 that we underwrote. And in 2021, this year, we've already put out 25 offers. So we're on track this year to submit twice as many offers as we did last year. And so we're trying to add about another 60 million in parks this year. We also have plans to add some apartments this year as well. So we're looking at that, and so stay tuned. What are some of the challenges we faced? I wanted to share that with you guys as well. I would say one of the biggest challenges is supply. So unlike apartments where you've got apartments, there's so many opportunities with apartments. You go to any major city in the country is going to have more apartments available than there are mobile home parks in the entire country. So if we were to narrow down the mobile home parks in the United States to just the ones that exactly fit our buying criteria, we're talking about less than 500 parks, right? So with the parks we've already bought and have under contract, we already own almost 3% of the mobile home parks in the entire country that fit our buying criteria. And with that limited amount of supply, it's making it very challenging for us to deploy the capital that we raise. We've been successful, but it's a lot of work. Just a lot of outreach, and sourcing the deals has been a challenge. We're doing really well. I'm super excited about every park that we've bought, and we haven't strayed from our buying criteria, but trying to ratchet that growth up is going to be very challenging given the supply constraints. And I think the second challenge is the demand has changed and the competition has changed. And we've been doing this for less than 2 years, and the cap rate compression that we've seen in the mobile home park space has been astounding. It's become one of the most popular asset classes. In fact, I saw a survey about a month ago of all the different real estate asset classes out there, and mobile home parks came in #1 for what people thought was the hottest, most interesting asset class out there. So what happens when you've got major buyers who are allocating large amounts of capital and saying, we want this deployed in the mobile home park space. And it's what happens when you've got that much demand coupled with the limited supply, cap rate compression, prices go up. So, already, we broke out our underwriting from some of our earliest parks that we bought, and we were looking at the cap rates compared to what we're seeing today. And it's just unbelievable. We've seen probably a full 2% drop, I would say, maybe more in less than 2 years in the cap rates with the mobile home parks. And then I think the other challenge is for us is deal size. We want to grow. We want those larger deals. The larger the deal, the more competition there is for those deals. And there are just not that many large deals. It's if we say, hey, we want to go out and buy a $20 million mobile home park, it's really, really hard to find. First of all, there's just not that many of them in the country. The people who own them are most of them are owned by large REITs, and they're not they don't come up onto the market very often. So, for the scale that we want to achieve and what we want to do at Open Door Capital, it's a challenge that, if you're buying apartments and you want to keep getting bigger and bigger, there's no end to it, right? You could go as big as you want. Still competition. I'm not saying it's easy with apartments, but if you think that it's hard to find a good apartment deal right now compared to even a couple of years ago, it's really hard to find a good deal in the mobile home park space. Other than that, I know there's a lot of people on the call who are probably just thinking about dipping their toes in or maybe just getting started. And so, the deals that I'm talking about in this scale, for some of you guys, maybe sounds a little large. I would say that I still see amazing deals in small mobile home parks. And a lot of the problems that we're facing at Open Door Capital doesn't exist if you're buying the little parks. Now, I'm not saying cap rates haven't gone down for the small mobile home parks. They have, but nowhere near the larger assets. So if you don't need an institutional quality park and you don't need 150 or 200 pads or a $10 million park, and you want to put, let's say you want to buy a $300,000 property, mobile home park is still a really good option. And you can get in and get, I still see deals that are 12%, 14% cap rates in the mobile home park space. They're just really small deals because they're still seen by your average investor as just not as sexy of a deal. It's just not as interesting to as many people for those small mobile home parks. Large institutions are allocating capital and they want to buy in the space, but the small investors, there's still opportunity out there, and there's a lot of it. Do we have questions coming in? I don't want to.
So no, Brian, thank you very much. There's definitely, I know people have a million questions. I have a million questions. I can help
So do I.
pick it off. And, you know, people have questions, go ahead and ask them. Brian is a source of wealth of information. So go ahead and ask your questions. But, you know, for those that are new to this, Brian, right? You know, what would you say the biggest difference is between a mobile home park and an apartment on the buy side, right?
Yeah.
You know, obviously there's similar debt. There's a lot of similarities, right? But there's differences. What is just kind of the, maybe that's question number one.
Yep.
Question number two, what's the most interesting thing you've seen on a mobile home park?
Oh my gosh.
And then my third question to you is logistics, right? You know, we buy in primary markets, like we love buying in Atlanta because I could day trip it out there pre-COVID, right? It's easy to get there. I'm in, out, back in same day. Mobile home park, totally not the case. So I'm interested to kind of hear, do logistics play into that? So those are kind of maybe my three questions.
Yeah. Okay. So let's see. First question, difference on the buy side. I would say you've got this really wide range in what exactly you're buying. So there's so many variables out there. I mean, in some ways, mobile home parks are very straightforward. In other ways, they could be very complicated. And that has a lot to do with how the utilities are handled and whether you're buying homes or you're buying the park. And so at its most fundamental level, you know, do you want to own the dirt and rent the dirt and the utility supply? Or do you know, the infrastructure? Is that what you want? Or do you want to own the actual homes? So that's probably, you know, the number one thing is to think about that. If you want to own the homes, the homes need to be maintained and you're gonna have to do repairs. It's just now you're buying something that from a functional standpoint is probably more similar to an apartment than an acquisition would look like if you were just going to buy the land. And unfortunately, you know, we're talking about workforce housing. You know, it could be some heavy wear and tear on these mobile homes, and it's kind of like an apartment complex, but the quality isn't as high. You know, the durability of the materials of a mobile home can't stand up to that. So that means you're going to have a really high expense ratio because you're going to have a lot of damage in there. So you got to think about that. You got to think about, you know, the utilities. You want to make sure, like I mentioned before, you go in eyes wide open. I'm not saying don't buy a park just because it's got septic. You know, septic is, I mean, a lot of us, you know, have septic for our homes. It can be maintained. It's not, you know, for our own personal residences. It's not too scary, but it's another variable and something to be aware of that, hey, you've got to like, that's something you need a permit for, and you need to do testing periodically. And it's just another thing you need to look out for. So if you're uncomfortable with that, my recommendation is you find a small mobile home park that doesn't come with like the actual homes and has public utilities. So your second question, what was your second question?
Come on, Brian. I thought you had the best kind of memory.
I remember the last question.
I intentionally did three. I was testing your memory. All right. Second question is the most interesting thing you've seen at a park.
Oh man.
No. Oh man. So yeah, that's tough. Like, you know, I've worked with, you know, very distressed apartment buildings. You know, if any of you guys on the call have read my book, Crushing It, I kind of chronicle one of my property turnarounds where there's all kinds of crazy shit going on in there that I share the stories with you guys. But, you know, it's the same thing with mobile home parks. Even the nicer parks that we buy, I mean, you got to remember, like, the average income of our residents is fairly low, and there could be a lot of drama in the park. And I mean, I wouldn't even know where to start in terms of even in a nice park, you have occasional activity that is, you know, you get a glimpse into the, you know, the human nature that you'd probably rather not see. So but I don't have anything specific.
We have some similar stories out of South Atlanta, so I feel
yeah.
You know?
Very political answer there, Brian. Very political answer. You must have ambitions for politics, right?
There you go.
Right.
And then the logistics side's been pretty fascinating too. So every park that we buy has a resident manager. So you've got actually one of the people that lives in the park or lives nearby. You know, in some cases we've hired people who live close by, and they come to they'll have an on-site office, and they'll come and they'll do their work day there. So with that local presence, that's enough, right? So we'll generally, even in a park with say 200 or 300 pads, we'll have a resident manager who's there primarily to collect rent and kind of answer questions and deal with issues that come up. A lot of times we'll have maintenance staff. Sometimes they're, could be full-time if it's a really large park, but in most cases it's not. And the smaller the park, the more likely your park manager is just a 1099 employee with very few hours. Maybe they get free lot rent. The larger the park, the more you're likely to have someone on salary and someone a little more professional. Small park, if you've got maybe 20 pads or 30 pads, it might not justify a resident manager. You might not have somebody. A lot of parks, there's already somebody there doing that. But my recommendation would be, if somebody here is going to buy their very first park, that if there's an opportunity to buy it within driving distance so that you can check on it periodically, that's not a bad idea. But when I bought my first park, it was local. And at that time, I was buying only things within about an hour's drive of my office. And I found that was very limiting for mobile home parks, because even though I decided at one point I was going to buy more, I couldn't find any. And so it wasn't until I got with Open Door Capital that I realized, hey, I really, for mobile home parks, I had a change in shift in mindset with all my investing, because I'm invested in apartments all across the country as well. But with mobile home parks, I didn't share one other criteria that's actually really important to us. We place a lot of weight in the legal climate in terms of landlord laws and tenant protection and things like that. So you couldn't give us a park in California. And if anybody wants to buy my park in New York, I'll practically give that to you too. I'm a little disappointed in the laws that have been passed in the last 18 months in New York, but we're buying, you notice from the list I went through, we're buying primarily in the Midwest and the Southeast, and in states that are landlord friendly.
Well, hey, Brian, I mean, I've got 20 questions for you, but I want to, be respectful of all the questions that have come in for you on the chat here, man. So I'm going to read a couple of these off. I'm just going to take it from probably the very top here. Bear with me.
It's, do you buy and add more pads?
Well, you're jumping around, man.
I think that is the first question.
Is that the first one?
Yeah.
So, all right, yeah, it is. You're right. Arlene.
Come on, Ben.
So at this point, we have not done that. We've got a few parks that if we get them full, we'll consider that. It's actually pretty challenging to do that, but it really depends on where you are and the climate in that municipality. Our experience this far is that there's a lot of resistance to adding pads in most mobile home parks. Like most communities they don't really get excited about expanding mobile home parks or putting new ones in. So, sometimes it's a challenge. Even in some places, they don't even want you filling pads once they're vacated, because they would rather see the mobile home park slowly go away so that they can put something else in its place.
Well, let me ask you this now, on that same vein though. I mean, given how tight the cap rates are, I remember you sharing them with me a week or two ago, right? And they've gotten really tight. And,
yep.
Have you guys looked into just buying a big plot of land and developing it? Right. I've talked to someone that's on the RV park side of things. RV park is very different than mobile home park in terms of just the CapEx you need to put into it, right? I mean, the RV parks expect, high-end gyms and some of these other things, but, I guess, have you guys really dug into that? And is it harder than I'm kind of maybe initially thinking? This is maybe the part of the question.
I would say that there is definitely an opportunity there. I would say you're right. I mean, in any asset class, if the cap rates compress too much, all of a sudden new build starts to look very interesting.
Yep.
With mobile home parks, very capital intensive. And one of the challenges is you have to, in most cases, you end up having to buy the homes and then sell them. So you'd have to build all the infrastructure out. Then you'd have to, build the pads and all the utilities that have to go in there, and the permitting and stuff with that. Like it's a whole project. Like you have to retain an architect and you go through the whole deal. There's an opportunity there. we don't have people who are like, we don't do development. And so it's just outside of our wheelhouse a little bit. But I could tell you that from what I know, that if you know, we've considered it, especially because in some cases you'll find a park that's virtually empty. Maybe it's got 10% of the pads filled. And it's appealing sometimes to think, hey, what if we went in, maybe fixed up the utilities and just built, you know, filled it like new. But it's labor intensive. You got to have somebody who's going to dedicate a lot of time and effort to that, and over the course of several years. And you compare that to going into a park that's maybe 75 to 80% full, filling, you know, 10 to 15% of the pads. And it's, you know, you can leverage the team a lot more there and do very well. So at this point, we haven't done that, but you're right. There's definitely opportunity.
All right. So I got a question here. What's the easiest way to get started? And then I think I'd seen in something else, another question from somebody else, which was kind of creative ways of kind of financing this stuff. I'm assuming probably on the smaller parks.
Yep.
Right.
Yep.
You know, so, you know, I mean, maybe some tips and tricks that you've kind of seen or heard of.
Sure. What I would say is what I've found to this point is a greater willingness on average to entertain seller financing on mobile home park deals than in other types of real estate. And that has a lot to do with the fact that so many of the mobile home parks out there have been owned by small owners for very long periods of time. And even some of the larger parks, I mean, we had one deal that it was a $30 million park, and the seller actually said they preferred to owner finance because they didn't want to get hit with the tax, like the taxes of the capital gains, and they didn't want to lose their income. So if we did a seller finance deal, and we ended up, we didn't win the deal, but we gave them like a matrix of options, and the one that they liked the best, they were going to finance 90% of the deal. Wouldn't even need a bank, and the rates were, you know, were good. We came in second on the deal. We were really close.
What kind of interest rate was he going to give you?
We were gonna. I think it was between 4.5% and 5%.
That's not bad, dude.
No,
that is really good.
It's not. Yeah, and they, you know, what they loved about it is, especially, we had this huge period of interest only too, which is what they wanted, because there's no tax consequences, no capital gains if all they're getting is interest, right? So I've seen that on all size deals, and I'm a big seller financing person. I did a lot of that as I built my portfolio. When I was just getting started, I mean, everybody would tell me, "Oh, we can't find seller finance deals. They're not there." It's, you know, that's crap. Like, it's just not true. You have to look really hard, and you can find them. And we find them more in the mobile home park space than we do in the apartment space. So
even though mobile home parks qualify for agency debt, for those of you that don't know,
they do. The hurdles you got to jump through are tough. You know, I should have mentioned among the challenges that we face, debt, getting good debt. We've started to get some good debt on some of our highest quality parks through agency, but, you know, a lot of them have like really like defeasance or really bad prepayment penalties. And the criteria that Fannie and Freddie have for parks is it's a long laundry list. You know, they want to have 2 off-street parking spots per pad. They want to see the curbing intact. They want to see, you know, there's a lot. It's just not as easy as you would think, although it seems to me that it's loosening up as demand and the bigger players are buying more and more.
Nice. All right, so we'll keep moving along. We got a lot of questions. All right, so what kind of a realtor do I work with for mobile home parks? I know us three, we talked about this a couple of weeks ago. Can I give some insight into, you know, the realtors that do these types of deals?
Well, I would say that they tend to be less geographically focused than for other real estate. So, you know, if you want to buy, if you want to buy apartments in San Antonio, there's probably a handful of brokers that focus just on that area, or maybe they go up into Austin, right? But if you want to buy a mobile home park, especially the larger parks, you have maybe 20 or 30 brokers across the entire country that are handling deals, maybe in huge geographic regions. There's just not enough parks in individual cities or even states for them to make a living off that. Now, with the smaller parks, you often find them. I mean, some of them you'll be on MLS. I mean, you'll find them all over the place. And there are. I'm not saying there aren't any regional mobile home park brokers, but you just have to remember because there's just not that much quantity there. It's hard for them to put food on the table if all they're going to do is mobile home parks. Yeah. So you'll have people who normally handle other types of commercial real estate will pick up a mobile home park. You'll have people who normally sell homes that, maybe the person who's selling the mobile home park has a realtor who sold in their house, and then they'll end up on MLS. So you can find them all over the place.
Nice. All right. So we got a question from Tim. I'm assuming he's talking about maybe if the people own.
He means the tenant.
Yeah. So he said, how do you make sure the owners still take care of their properties? Fees?
Yeah. So I'm assuming that we're talking about the residents taking care. And so every time we go into a park, we put everybody on our lease, and we have rules that need to be followed. And if they're not followed, you have a lease violation. And eventually, if it's not rectified, we can have them evicted from the park. I should also mention people who are looking for mobile home parks. There's a website called mobilehomeparkstore.com that you find a ton of like mobile home parks of all sizes on there, including owners for sale by owner.
Yeah, because that's kind of the next question. What's the smallest one, right? So I think Marie's probably,
she's bullish, man. You got her excited to go buy a park.
I know. She how do I get into this thing, right?
Yeah, I mean, you can find mobile home parks that have 5 pets. I mean, I see them all the time, 7, 10, 15 pets. And you can find parks for well under 500,000 if you looking for something to just get started with.
And she says, so buy the property, not the home. So you're wanting the dirt, right?
Yeah.
You don't want to deal with the homes. And I had heard something, you need some licensing if you wanted to sell the homes or something. I forgot exactly how that all worked. I'm sure you can probably, what I'm talking about, right? If you have to have some kind of license.
I forget what it was.
Well, no, yeah. It's like an actual like license where if you want to sell the home, you have to almost be like a car dealer type deal, and it was a whole nother hoop to jump through. So
if you go over a certain number of quantities, then you should have a dealer's license. But there's specific, we actually, the vast majority of homes that we sell them at a loss. And so those laws are actually for people who are making profit from sales. So we actually, when we sell a home, we're increasing the value of the park by probably anywhere from $40,000 to $60,000.
Oh, so it's a loss leader. Just give it away.
Exactly. We'll pay to bring a nice home in. We'll drop maybe $20,000 on a home, spend $5,000 to move it, $5,000 to set it up. We might be 30 grand in. We might sell it for 20 grand because the value of the park would go up by 50.
No, not bad. All right. So Matt's asking, do you do utility bill back?
All right, I'm going to expand the question a little bit. How do you make money on a mobile home park on the actual revenue side of things?
I mean, lot rent is by far the number one thing, but the utility bill back is huge, right? Because you've got far fewer levers with mobile home parks than you do with apartments in terms of there's some things that really stick out, and one of the major ones is usually the water sewer. So you definitely want your tenants paying for utilities. Occasionally you find them where they're direct billed. That's fantastic. You don't have to mess with it at all. If you are going to try it, in most cases, you as the owner are paying all the utilities, and then you're going to try to bill those back to the tenant. So in a lot of our properties, we sub-meter, but a lot of times what we've learned is you don't always have to spend the money to sub-meter everything, because a lot of states will allow you to bill it back without doing that. You just prorate it. Like if your bill is $1,000 and you've got 10 pads, you can bill $100 per pad back to the tenants if you choose to do it that way. Yeah, depends on the state that you're in. You have to, and every state has a mobile home park association that you can join that'll help you in terms of, providing you advice and understanding the rules.
Nice.
All right. Any ideas of creative financing? I think we kind of talked about this to purchase this types of homes. I'm assuming maybe the actual, mobile homes themselves versus the park, maybe. And I remember Kiyosaki always. This is one of his shticks. Whenever I got into real estate 7 or 8 years ago, where you would owner finance the thing, and then you continue to owner finance it. It doesn't sound like you even mess around with it, right? It's almost just a nuisance to even have them. So you don't even keep them on your books, like you said, correct?
Yeah. So sometimes, it's great if we can get a cash sale or the buyer can find their own financing to buy the home themselves. But a lot of times we end up owner financing portions of it. So we do have to do that. And so that creates a need for cash. So we set money aside for infill when we buy. In fund one, we didn't set it aside. We actually have private lender that lent us capital to go out and buy and resell the homes.
Interesting. Okay. All right.
Let's do one more question and then
we only got two. We got two more. We got a few more. All right. So yeah, what defines a small, medium, or large park?
So that's pretty subjective, right? So I would say a small park would be probably maybe 20 to 30 pads or less. Medium is maybe in that, 30 to 80 to 100, and then a large would be 100 plus. And so for us, we're definitely looking 100 plus. I think the largest we put a park that was about 600 or 700 pads under contract, but we got deep into due diligence. We didn't like what we were finding, and so we sold the contract. But I think our largest park right now, I don't know, it's 200 and some pads. I think maybe 230.
Gotcha. All right. So Ronnie asks, who are the biggest institutional investors in the space? And then secondary question, how do you structure your blind pool fund?
Okay. So Blackstone actually just made a big investment into the mobile home park space. But by far the biggest are Sam Zell's companies. He's got a couple of REITs that have been buying up mobile home parks for decades. They've got, I think, over 100,000 pads. So
and I think he's got a ton of apartments too, from what I remember. Yeah. So yeah, no, he's a big player. So okay, so I know Ronnie, where Ronnie's going with this. So you talk a little bit. You don't have to give away your whole secret sauce, right? But just talk about the fund, right? Because
Sure.
we do a lot of syndication, but it's more deal to deal. Just maybe for some people that might be interested in investing in your next fund. How do you guys structure that?
Yeah. So basically, the first three funds we did an 8 pref. And then above an 8 pref, it's a 70-30 split with our investors. And it stays a 70-30 split until the investors get a 15% IRR, and then it goes to 50-50. So that's our waterfall. I would say that we've hung on to that for 2 years while everyone around us, because cap rates have compressed, have dropped their target returns. Makes it so hard for us to find parks right now. I don't know what our targets are going to be for Fund 4, but I would say it's almost certainly going to be a 7 pref instead of an 8 pref, and the returns are going to drop a little. But we're buying. We feel really good about those returns given the quality of the assets that we're buying. It's the website is odcfund.com for Open Door Capital, odcfund.com. So if any of you guys want to check it out, or you want to hop on the mailing list and kind of like get updates when there's opportunities available, feel free to check it out.
All right, I'm dropping that in the chat. All right, one last thing, man, because I know we kept you a long time.
No worries.
What are the economic indicators you look for to buy mobile home parks? Are they the same as multifamily, right? And obviously, you got a good perspective because you have a lot of experience in both, right?
Yeah, for the most part, they're very, very similar. In fact, we actually look at rents like across the board so we know what our competition is, because in many ways, Class C apartments in many of these communities is the closest competition that we have with the mobile home parks. So we're looking for all the same drivers. We want to see strong employment trends. We want to see population growth. I mean, one of the first things we look at just as soon as we see a park in an area is we'll pop up the population trend chart and just see where it's headed. And we really try to shy away from places with declining population. That said, it's been very, very interesting we have not seen in practice a direct correlation between population growth and demand for mobile home park pads. So when we're trying to fill a park, it's been quite interesting. You just don't know what factors are at play, but in some communities, even if they're not growing as well, there might be an unmet need for affordable housing options. And so sometimes you got to dig a little deeper. When we're uncertain, we'll actually run test ads and see how it plays out. So if the population trend or the employment trend looks a little iffy and we're uncertain, and we know we're going to rely on infill, we'll actually place some ads and see what kind of responses we get before we make a decision.
Wow, that's pretty creative too. I don't think I've heard of that before. So, kudos to you, man. But hey, Brian, I mean, that's all the questions that we've got, unless, anybody else wants to drop a last minute one, but I wanted to thank you, man.
Yeah, no, Brian, thank you
Wealth
very
of knowledge.
much. Totally appreciate it. I think the
Awesome.
audience enjoyed it. I mean, it's something new, something different, right? I know we're multifamily masters, and to me, mobile home parks are still multifamily. So thank you very much,
Absolutely.
Brian. I don't know if you're going to stick around. So for those of you that have never attended, right, we are going to do our breakout room. So basically, we will break out the audience into a group of about, the goal is really in that 5 to 7 people range. And it's just really an opportunity to get to network, get to know someone smaller. Maybe Brian will stick around and you can kind of get to pick his brain a little bit more. Maybe you'll get someone like Ben or Ronnie, right? So, the idea is really, breaking out the
chopped liver here or what?
Get to know your neighbor, get to know your people, right? And so, if anyone's looking for a conversation topic, I mean, ask them what they did on Monday for lunch. Boom. All right. But that said, thank you all very much. I'm going to go ahead and kick off the breakout room. And, if anyone has any other comments, questions, save them for the breakout room. Going once.
Thanks, everybody. Thanks, Brian.
Thanks, everybody.
Thank you, Brian. I really appreciate it.